I will continue with Professor Rosengard, who's going to speak to us about, again, the future of tax cooperation. Professor Rosengard when I was at Harvard, we used to call him, and I guess students are still calling him the guru of taxation. So I know you're laughing, Professor Rosengard, when I say that, but it is true. Professor Rosengard has been with us at Tax Co-op years after years, supporting us, supporting the work we were doing. He's a professor in tax policy, public finances at the Harvard Kennedy School. He's in charge of CompTax, which is a fabulous 2 weeks seminar. Thank you so much. Seminar at the Harvard Kennedy School, which I personally attended because I didn't have enough of 45 hours of you. And so you accepted to speak to us again today. So I'm gonna let you the floor right now, so you can share your thoughts. Thank you so much.
Bonjour, mes amis. Greetings from Boston. Thank you for that very gracious introduction, and it's a pleasure and an honor to participate in the last Tax Co-op rendezvous. It's kind of like the last dance. I have been an enthusiastic supporter of this bold initiative since its inception, and I would like to congratulate Brigitte, Lynn, and Louise, as well as their incredible team for the remarkable achievements. They've raised global awareness of the need for international tax cooperation and the consequences of mutually assured destruction with counterproductive tax competition. And they have been a forceful catalyst for pragmatic reform. So I'm going to kind of flip the order of my presentation from Kimberly. I'm going to give you the good news first, and then the bad news, rather than all the problems and then the good news. So I'd like to cite two tangible results of, I think, the efforts of Tax Co-op. The first is the OECD G20's Base Erosion and Profit Shifting, or BEPS project. And there are now 141 countries and jurisdictions working together in a BEPS inclusive framework to tackle tax avoidance, improve the coherence of international tax rules, ensure a more transparent tax environment, and address tax challenges from digitalization of the global economy. And in addition to improving tax efficiency and tax equity, these efforts should help to collect between 100 and 240 billion US dollars lost in revenue annually, which is equivalent to between 4 and 10% of global corporate income tax revenue. The second major tangible result is the accord endorsed in July this year by the G20 and now supported by 132 countries, which comprises 90% of global GDP, to establish a global minimum tax rate of at least 15% for multinational corporations to ensure that these firms pay taxes in the countries where they generate their profits. Since I'm sure our esteemed colleague, Pascal Saint-Amand, will address the future of BEPS, I'll focus on the global minimum tax challenges. And I agree completely with what Kimberly said in her opening remarks. So I'm going to focus on a different set of challenges. I believe that most of tax policy is actually made during policy implementation. And this is why my Harvard Kennedy School Executive Education program on taxation is called Comparative Tax Policy and Administration, or CompTax. This is what Brigitte referred to earlier. And when you have these global agreements in principle, the devil is really in the details. And there are several risks that we have to collectively mitigate in implementing a global minimum tax. And I'd like to just list 5. I think of the main obstacles and effective implementation of an agreement that looks very good in principle. The first is to avoid a downward global convergence in tax rates so that the minimum tax doesn't also become the maximum tax rate. And I think the US plans to set its rate at 21% rather than 15% is an encouraging example for others. It should be a floor and not a ceiling. The second is ensuring equitable allocation of the corporate tax revenue so emerging markets receive their fair share. There's a lot of discussion about how you define the base and how you allocate the base. And depending on the definition and terminology, some will greatly benefit the richest countries and others will ensure a more equitable distribution. So I think this should be paramount in the definition of our tax base and the allocation of the profits. Third, I think, is the challenge of adopting a broad and comprehensive definition of corporate profits and adapting standard accounting around the world so that new tax avoidance techniques do not replace the old ones. Never underestimate the entrepreneurial acumen of corporations. Fourth, I think, is the challenge of establishing an effective dispute resolution mechanism. We really don't have a good corporate governance institution to deal with national disputes over taxes. I think one initiative that is worth exploring is perhaps establishment of some type of global tax court. You don't want to leave it to the richest economies to decide for the rest of the world. A lot of the legal agreements the corporations have is probably, again, not the right vehicle. So some new credible way to resolve disputes over the global minimum tax. And the fifth is, this is an experiment. And I'm sure there will be unintended reactions, unintended behavior. So I think it's important to monitor the results carefully from today's baseline and to evaluate this endeavor in 5 years rather than the planned 7 years, and that we be willing to make adjustments based on the results after this interim assessment. Again, it's really difficult to predict behavior. And I think at a minimum, we should expect the unexpected and be willing to adapt our behavior. So in conclusion, although I applaud the tremendous progress made to date in the promotion of global tax cooperation, I would also like to note that our journey has just begun, and we still have a long way to go until our vision becomes a reality. And even though this is the last meeting of Tax Co-op, I look forward to working with the Tax Co-op community towards our common objective, perhaps through other vehicles, institutions, and mechanisms. Thank you once again for this opportunity to join in the last dance. Thank you.
Thank you very much, Professor Rosengard. These are, again, precious words that you generously addressed to us today. And I really, when you said that at Tax Co-op 2018 at the OECD, you also mentioned that we should, you know, the minimum tax should be should not be how did you say that? I just want to make sure I say it. Yeah, it should be a floor and not a ceiling. I just adore when you say that. And this week we went back to Tax Co-op 2018 and we took the video when you said that at the OECD, and we put that in our social media because it's very well said. So thank you very much. And I will, and you know, Of course, yes, thank you, Louise. And yes, the idea of the International Tax Court is something
Brilliant.
that is brilliant. With something that we have to really think more and more, because it's very difficult to globalize our economy and to have multinationals without thinking about some way of have, it's only logical. We sooner or later this court will exist. So thank you for suggesting it. Yes, it's the last dance, but it's not the last time we will dance with you. That's for sure. So thank you so much.